Welcome to Women at Halftime podcast, but not just for women, for you men too. If you're at mid-career or the halftime of life, our inspirational topics are not only fun, but also meant to help you maximize and write your next chapter. Right here with me, Deborah Johnson. Well, hello. Good to be with you today. Thank you, Greg, for being with me.
Hi, everybody.
Yeah. And this is our podcast that once a month I bring on my very handsome and very smart husband, especially with what we're going to be talking about today. And as a reminder, we focus here, it's not just for women at halftime, but it is for those who are at mid-career, at halftime of life, who are just really navigating this next chapter. And but a lot of women are the ones that listen to this podcast. So, but if you are a gentleman and you are listening and you are here to hear these wise words of what we're talking about today, I'm so glad that you are here. A reminder, you can see right behind me my new book, Stop Circling. Also the one before that, which is the Summit. Wonderful book I've written. This is my 6th book, Stop Circling is. So it's available now, and I hope you pick up a copy. You can preview everything on Amazon. All of them are on Amazon. And to make sure you get our newsletter as well. There will be an article that goes with this particular podcast you will want to get. I will provide some other resources in it because we're talking about the financial crisis and how to navigate at halftime. Specifically, as we are recording this, I usually pre-record, so who knows what's going to happen in the next weeks and the next month. But the banking crisis that has happened. And of course, Greg's experience is perfect because he will be able to give us some wonderful insight from the financial end as a former RIA and financial advisor, smart guy with numbers. And so that'll be wonderful there. So thank you for joining us on this topic, especially, and gives me a lot of confidence in facing this because I want to dispel some of the fear. There's fear when it comes to money. People, they're hesitant to even make new moves. So, Greg, let's start this out of what it, what it all means with this, a banking crisis, or when did banks even start, and what was the beginning of all of this?
Well, good. Well, so as we look at some struggles in the banking system, I thought it'd be good just to give you a quick background on why banks exist, because then you're going to be able to figure out what risk you are taking. Mm-hmm. So banks were designed to provide capital to expand economies. And if you can just imagine, a time back in Italy when there was a few families with access to money. If you wanted to grow a business or get a loan, you had a limited number of places you could go to get that. And then those families could only exercise limited numbers of loans. So the whole access to capital is very limited. Somebody came up with a brilliant idea of what happens if we consolidated the opportunity for lots of little depositors, mom and pops, tens of thousands of them, none of whom could loan their little bit and make a difference. But if you pulled it all together, then you could create a capital pool that could help everybody out because it could grow the local economy. And so that's kind of how banks started. And so what depositors did was, instead of hiding it under their mattress where it was susceptible to theft, they put it in a bank. The bank provided safety. And instead of being partners with the bank and participating in the profits or losses of whatever their loans were, in exchange for a deposit, you get a fixed return on your investment called interest. So there was limited risk on the part of the depositors and limited profit to be made. But for most people, who couldn't afford to lose their deposit, it was a brilliant idea. And I think banking started, the late 1300s, gained a bigger foothold in Florence in the 1400s. And finally, I think England, did we decide England's first bank was like in the 1600s?
Yes.
Yeah, I think that was it.
Right.
So that's basically what a bank is. It's a consolidator. It brings together small deposits, creates a capital pool that can then provide loans to the local economy. And obviously, big international banks provide loans to the big international economy.
Right.
But the ones that we're worried about today are the regional banks that basically provide the loans for the office buildings you drive by in your neighborhood, the strip malls, the gas stations, all of those local services. Right. So capital to the local economy is vital, and so the regional bank, it tends to be vital too. How that impacts us at halftime is that regional banks, if they are squished on their lending standards, are going to make less loans. If they make less loans, then you and I, as at halftime, as we try to expand our business, are going to be pressed to provide real proof that we have a viable enterprise going, and probably you'll be pressed to provide more capital. So, for instance, usually you'd have to put up collateral like your house, and generally speaking, they would have given you 75% of your equity. That may be 60% of your equity now. So things are going to be tight for the next couple of years. And the reason we bring this up is that entrepreneurs, especially at halftime, have enough mindset problems. And you could talk yourself out of a really viable opportunity if you let the head trash get to you that you have no access to capital. Now, one of the things that happens when regional banks stop lending is that private capital becomes much more available because they've taken their money out of the bank and are looking for something to do with it. So this is time for you to get creative, and think about, private pools. If you could put together 4 or 5 private investors in some sort of, limited partnership, that could be a real opportunity at this kind of time. So anyway, that's banks. So as you think about putting money in your bank, recognize that you're basically participating in a consolidation pool, and it's a real opportunity. However, you should probably limit your risk, because the interest that a bank's going to pay you currently is not as good as you can get in a U.S. Treasury note.
Right.
And you can get U.S. Treasury notes through any brokerage account. So if you go to TD Ameritrade or Fidelity or Schwab, put a few $1,000s in a brokerage account, you with a few clicks, you can buy U.S. Treasuries. And currently, you can buy them with, coming due in 60 days. It's not like you have to tie it up for 10 years.
Right.
60 days. And they'll pay you nearly 5%. Yeah. So U.S. Treasury on the one hand, local bank on the other, the safety risk appears to be in the form of opening up a brokerage account. Yeah. Brokerage accounts tend to be pretty competitive on money market. And check the fine print, but most brokerage accounts provide insurance on money market up to $100,000, not up to $250,000, but you still get some safety there.
Right.
And so those are important things to think about.
Thank you. I mean, we are, I want to make sure that this is not, you need to have your own financial advice. Financial advisor. This is not a disclaimer here, but to educate yourself as much as possible. And that's what we are trying to do. In fact, as we were talking about this, I told Greg that I still remember so vividly. I was in elementary school, and my grandmother, the tightwad of the century, but because she grew up in the Depression, I mean, she had nothing. She saved plastic bags, she saved foil, she saved everything. And she gave my sisters and I a $100 bond note. I felt so rich. And we walked into the Bank of America. I still remember we were down in Southern California, and it was a huge, I was, in elementary school, so I was, tiny and small for my age too. So this huge bank, and I walk in feeling like, oh, I just was so rich, but I had no idea really what it meant. It was just that she said, you need to hang on to this for a while. And so then I learned later, because this was really not my field, that bond, she had probably bought it at a discount, and then it had matured, and it was worth all of the whole $100 when I finally cashed it in. I think I didn't cash it in until we got married. Right. I think I just had that. Right. Yeah. So, but that is what different ways of purchasing bonds as well. You can purchase them for a discounted price that will be in maturity at some point, which is, the numbers end up being the same pretty much. Yeah. Or you can just do it for a certain length of time and receive the interest. So there's a lot of different ways. Just do your research on that. But it's interesting when you mention those bonds, even that we see where the different ways of being able to invest money and invest, taking away the fear of, I know people still that I think they put money under their mattress, or they're hiding it in their house. And I want to take away some of that fear of being able to put it into, some safe place. And, doing a little bit of this research, even finding, I asked you, and you were pretty sure how they started, but even Wells Fargo Bank. I mean, the banks in the United States started before Wells Fargo. But Wells Fargo was like a Pony Express too, because they delivered mail. So there was a twofold purpose, and they wanted to be able to do that as well as.
Well, they used their mail delivery system to help finance Western expansion.
Yeah. So I thought that was interesting. With that sort, and Wells Fargo is one of the largest banks still in the United States. So I don't know.
One of the things that we wanted to talk about was prudent actions to take. Yes. So, the way the banking system works is on something called fractional deposits. And generally speaking, a safe bank will take in deposits, and then they can make 10 times the amount of loans. Mm-hmm. To give you an idea, back in the 2008 financial crisis, some international banks were making 20 to 25 times the amounts on deposits. Wow. So 10 times, 8 to 10 times, it's standard, it's prudent. However, as you can imagine, if you only have $100 on deposit and you've got $1,000 out in loans, trying to get, if everybody wanted their $100 back at the same time, mm-hmm. there's just not enough cash.
Right.
Which is why there's FDIC insurance. Mm-hmm. So everything under $250,000 is insured. And mm-hmm. even if you can't get that money today, mm-hmm. The federal government's pledged to make you whole. Right, so there's no fear. It really, anything deposited less than $250,000, and I would guess that one out of the entire group of people listening to this has more than $250,000 deposited at a bank. Mm-hmm. However, when we get into a banking crisis, people are fearful and they're moving their money around. Mm-hmm. And even though you might not be withdrawing it, you might move it from one regional bank to, a bigger bank. And that's still puts stress on the system.
Mhm.
And the reason it does is what I want to explain to you is, so here's a little bit of what's going on underneath the surface in the banking system. So the banks can take our deposits and they can loan it out, or they can invest it directly into conservative investments. One of the most conservative investments would be packages of mortgages.
Mhm.
And typically mortgages come due in every 7 years. And so there's, like a 7-year wait, but then you get all your money back. And those pay reasonable interest rates. But as the Fed recently has been raising interest rates from less than 1% up to nearly 5%, what that's done is made loans that were made a year or earlier become worth less in value. Hopefully that makes sense. If you borrowed, if you loaned somebody $1,000 2 years ago at 2%, and now you can loan somebody $1,000 at 5%, the $1,000 loan paying 2% is worth less money.
Right.
So
Makes sense.
that ends up being on the books, quote unquote, discounted.
Mm-hmm.
It's just worth less if it had to be liquidated today.
Mm-hmm.
Now, if you leave it alone, it continues to pay interest.
Right.
And when the note comes due, everybody gets paid
Mm-hmm.
and everything's fine.
Right.
It's whether you need to sell it today. So
Right.
what happens in a fractional deposit world is that you blow through your cash as people are moving money from bank to bank. Then in order to raise cash, you start to have to sell some of those discounted notes.
Mm-hmm.
And you're selling those loans or notes at a discount or a loss.
Mm-hmm.
Hopefully that makes sense.
Yes.
So as you have to sell hundreds of those at a loss,
Mm-hmm.
suddenly your balance sheet, instead of being solid because you're anticipating keeping it for the duration of the note, suddenly you're at a loss.
Mm-hmm.
And when you yourself are borrowing money to loan stuff out, and your balance sheet goes down, suddenly you don't have enough money to pay for your own loans.
Mm-hmm.
And that's what causes the need for a bailout.
Mm-hmm.
And there's two-way bailouts can happen. And in our move towards socialism, what keeps happening is that the Fed comes in and bails out the bank, and somehow makes a loss whole. So taxpayers end up paying for the 10% loss or 15% loss in order to pretend that the bank is solvent.
Mm-hmm.
What should happen is that you and I as investors get the opportunity to buy all of those loans at a discount, make some money, let that regional bank temporarily go out of business. They can always get back into business, but temporarily go out of business. And then what happens is you and I as investors take on a healthy respect for risk. We get scared. And the next time we make a deposit in a bank, we, instead of just blindly putting the money in there, we do double and triple checking of the bank's balance sheet. We check online to see what the Yelp reviews are. We start seeing what Twitter is saying about that bank, and doing as much due diligence as we can. And in that case, the good banks get rewarded, and the bad banks go out of business, which in a normal world really makes the system much stronger in the long run. When we keep bailing out banks that are taking too much risk, all we do is reward too much risk.
Mhm.
And, we create, as you can tell, inflation.
Mhm.
And inflation creates higher interest rates. Higher interest rates create more discounted loans,
Mhm.
which creates more bad banks.
Mhm.
So the remedy in a real world would be for all of those discounted loans to go on sale to allow us to buy them up
Mhm.
and make reasonable interest on them. Because all those loans are still performing.
Mhm.
Nothing wrong with the loans.
Mhm.
What's wrong with them is the value of the loans.
Yeah.
So the prudent thing to do right now, if you know that your bank could be susceptible,
Mhm.
would be one, keep about a month's worth of cash
Mhm.
at home.
Mhm.
Two, recognize that the banking system is going to stay. Whether your funds stay at that regional bank or they get moved to a big international bank, all your money is going to get moved.
Mhm.
The only thing that could possibly happen is they might freeze withdrawals over some extraordinary amount. Like they might freeze withdrawals over $10,000 for 2 weeks.
Mhm.
Even if they do that, given the fact that we have electronic banking going on all the time, and I'm sure a lot of your monthly bills are getting paid automatically from your bank. It's automatic debit.
Mhm.
I would imagine, in order to keep the economy going, all of those are going to be allowed to continue.
Mhm.
They're not going to be called "quote unquote" withdrawals. They're going to be called debits. And debits will be allowed. Flat out withdrawals or moving money to another bank will be temporarily frozen. We'll see if that happens. But I would imagine that'd be the worst case scenario in this case, because the government has basically pledged that everybody's going to be fine. And again, if you've got FDIC insurance, you're really fine. So the point of all of that, I hope I didn't belabor it too much, is that whatever money you have in the bank to pay your bills is safe. Your bills are going to get paid, and life is going to go on.
Yeah. I love, as you were, I've learned so much, of course, about finances because being married to you, numbers were, I was not bad at numbers. I've passed all my math class, but it just wasn't, this was a lot of what your field was. But as you were talking about Yelp reviews, I was thinking about Yelp reviews on a restaurant. Okay, so what if, here's a good scenario if we can think about this. What if, that restaurant is not doing well? Well, let's bail it out. Let's just put more money in it. But the reason it's not doing good is because it's made bad decisions on bad food.
Yeah, it's got bad food and bad service.
Bad service. So people are not showing up. Well, let's just help it out. Just keep going. But it doesn't make sense.
Right.
But the principle, the interesting thing is the principle is the same. It's really, there are so many life principles that cross over for every field. And I really want to just dispel this fear, like it's an area, because sometimes I think, I'm not good at I do my own finances, but I would hate to I'm not going to do investments like you do. That's not my field. That's okay. It's really okay. I won't depend on the people who are great at that. But I'm very confident in being able to bank. In fact, my little bank that I love is being bought out by another bank. I'm very confident of that. I'm not going to pull everything out of it. I love my little bank,
right.
And it's still going to be a local bank. But this is what happens with these banks is they get little buyouts, but it's nothing to fear. So I want to dispel this. This is a big message of what I've talked about in the last couple years too, is to dispel some of the fear of being able to go forward in life, no matter what happens in the economy, in our health, everything else. So I think that's an important point.
Right.
So well, that was the advice that you gave for the prudent, investing and all of that was just very, very valuable. in that you said just to, make sure you have enough cash at home, and you can hide that under your mattress if you need to, and your banking system, or put it in a safe place that only you know, or have a home safe or whatever. But it's not going to be the loss of the world if that month goes away somewhere. And the banking, just that you're be confident that your bills will be paid. And I've also read about diversifying your investments, but you really need a trusted financial advisor to do that. A lot of people are trying to do that this diversify with their investment. But what you said too, in putting money in a bank, you might want to think about that very, very prudently of what sort of investments that you need to be able to have in the dividend funds and all of that. So that was a lot of part of your work of what you did. And just being confident that and not just panicking and
right.
pulling everything out. So, well, are there any other, I was looking at my notes here to see if we've covered.
I just think recognize going forward that you should probably have a little bit more cash, and ask yourself the question, why do we bank? Back before online brokerage accounts, banks were local, convenient. You could get your money, anytime. Now that you've got online brokerage accounts, where you can buy U.S. Treasury notes, you can buy quality corporate bonds, all with a click. You can keep it in a money market account, and you can move the money to any financial institution you want to with a click in a day. So the reason for local banks has changed, and you probably should reevaluate that, not depend on somebody managing your money that way. Right. Another thing, though, be careful when you go to financial advisors. I was a financial advisor about 20 years, and I can guarantee that 1 out of 1,000 would be able to look at a bank's financial statements and tell you whether that bank's solid. Financial advisors just aren't schooled to do that. What they're schooled to do is to help you reasonably manage risk, and they put you in very vanilla portfolios. So maybe if you can find a chartered financial analyst, they're equipped to do that kind of work. But most chartered financial analysts work for a corporation. They don't work for you and me. So, the way to check if a bank is solid enough is, you're literally going to have to type in Bank of America and look up all the good and bad news about where they're headed and see if you can digest that stuff. So don't depend on your financial advisor is kind of my advice. You can glean quite a bit from the internet. Better idea, get your own brokerage account. You use a bank for less than $250,000. And use the bank for your bill paying. Banks are uniquely set up now to do all the debit, monthly automatic paying for everything from your mortgage to your utilities to your insurance. So use the bank for that. And keep whatever amount of money you need to have in there to keep up with your monthly expenses. But beyond that, rethink why you have a bank.
Right. That's great advice, and to do your own research. I think, a lot of people want to just leave it to somebody else, leave it to, here, you make the decision for me, but, do a little bit of that research and really, rely on that intuition as well. There's enough information out there now. You can Google almost anything, but be careful. I always say, be careful of research. When I was even doing a little bit of the research, and then, you get a lot of blogs. I want the research. I want to know the actual numbers. I want to know the actual research on some of these. It's not just somebody's word telling me something, because again, that's just like trusting one of your neighbors and going, okay, what do you think? Well, then that's what I'm going to do. You want to make sure that you are actually doing some of your own research. And we've got resources to do that now online to find almost anything. I wish I had this in graduate school.
Mm-hmm.
And, to just be able to make intelligent decisions, not to be fearful, not to be afraid. Again, this was great advice to do your own research. We are not giving you financial advice, but this was advice to do your own research and your own financial looking at the whole thing to just really take away some of this fear in this, what you feel is a financial crisis. And it was interesting when you mentioned that 2008 and 9, what happened as well, because we can look at history of what happened as well. And hopefully today has given you a little bit of education to even look back and to see how today is similar or how today is different than it was. But a lot of this, people that bought, I remember very clearly two people that bought these homes, these huge homes, and, I'm having a new home bill. I got all this cheap, this big cheap loan. I was able to do this. And then, everything hits, they can't pay anything off. They lose all. We've known a lot of people who lost a lot because they just didn't act prudently. They didn't, and people going into new businesses, I really encourage a side business first, keep that main job, keep the income coming. So you got to look at your risk as what's happening, with everything. So anything else to add? This was quite something to dig into this. We didn't want to get, be careful that we're not giving you actual financial advice. This is not a
we're giving financial opinions.
Yes, and to really look differently about what the control, having your own control of your resources, because it gives you more freedom in your life.
Hopefully, we gave you an overview of how the banking system works.
Right,
and also a fair critique of where we're at, what you need to be concerned about and what you don't need to be concerned about.
Right.
So we wanted to add a little bit of balance. This is not a time to panic or really be afraid.
Right.
But it is good time to reassess some things. So hopefully you feel confident in doing that now.
Oh, that's great. Well, thank you again for being with me today, Greg. Once a month, we're on together. I bring in a guest once a month, and I speak a couple times, at least a month, on our podcast. Newsletters come out every single week with an article that you don't miss a single one. I know people are bombarded with email right now, but I have a double opt-in. You have to sign up for this, which is goalsforyourlife.com/newsletter. I do not automatically add you. That's very important. Again, goalsforyourlife.com/newsletter. Deborah Johnson speaker. I take a certain number of live events, and also DJ Works Music. Everyone loves the music. So, but thank you again for being with us today. It's always a pleasure, and we will look forward to being with you next month together, and I will look forward to being with you again next week. Bye-bye for now. Thank you for joining us. It is because of our wonderful listeners like you that we keep going strong week after week. We'd love it if you'd share and follow us to not miss a single show, and even write a review. You can also find all of our articles, products, and links at womenathalftime.com.